Thank you for joining us. So, as a recruitment business, McKinley's seen a huge impact to our clients during this COVID-19. Not just having to present this from my spare bedroom, but what we've been doing during this time is partnering with a number of leading companies to bring a series of topical webinars to help our clients through these challenging times. Today, we're really delighted to have Rob and Sean from McGrathNicol, who specialise in strategy and advisory, respectively. Rob and Sean work with a range of companies to help them set and implement their strategies to ensure their success. Love getting into the detail, providing practical guidance and help, not just the theory. So today, they're going to talk about why a strategy is important now. The critical components to ensure success, and then some practical steps to overcome some of the challenges and take advantages of opportunities in the market. So we'll be having a Q&A at the end of the presentation. Please feel free to chat your questions as we go along. I'll collate those and put them to Rob and Sean at the end. And we'll also share the presentation with you as well. So I know Rob and Sean have also said they're more than happy for people to reach out to them directly if they've got specific questions on their business or want to chat any further. So without any further ado, Rob and Sean are presenters today. I know Sean's going to kick off, so over to you.
Thanks, Tom. Appreciate the introduction, and thanks everyone for joining, allowing us into your living room. As we were chatting with Dom about at the beginning of this, I think we've all become quite familiar with webinars as a way of providing content, and the webinars that Rob and I have been involved with over the last sort of 6 to 8 weeks have worked really well, where people participate and provide their comments via the chat function along the way. So just to reinforce Dom's point, if you've got any questions, but also if you've got any comments of things that you're experiencing yourself, we'd love to hear from them as we work through the presentation, and we'll build that into our discussion as we go forward. Rob and I sort of purposely branded this with Dom as a sort of looking beyond the period of disruption that we've just encountered. It's been a period of disruption for all businesses. I think in our own experience, where we've seen the disruption hit is obviously with a large workforce, trying to mobilise them remotely, and then from a work and activity point of view, it's changed in its form, given that businesses have reduced their discretionary spend, and the assistance that we've been providing to companies has more been, particularly in the early stages of the COVID period, was I suppose helping them brace themselves for that period of disruption in terms of managing cash, understanding their cash runway, getting businesses organised with their lenders. Those early conversations back feels like a sort of a lifetime ago, but 6 to 8 weeks, only a short period of time ago, where we were helping businesses organise themselves with other key stakeholders. So there was definitely that period that we found in the activity that we were experiencing around the reaction phase to this period of disruption. That quickly moved into a period of stabilisation, and Rob will talk sort of more about this from an industry specific point of view, but clearly there was a quick and swift response from the government, and that was largely cash focused. So a lot of subsidy relief, cash boosts for small business, ATO style relief that allowed businesses some extra breathing space to manage their cash flow and that cash runway that I mentioned. But increasingly over the last couple of weeks, we've seen the bias of the conversation start to shift. So businesses are now starting to look beyond. There's been pockets of reopening or restart, if you like, across different industries. So we're starting to now have those conversations with businesses about how they best reset for that. Rob will tell you that it's difficult and challenging to set strategy at the best of times. It takes a coordinated approach. It needs to involve people across all parts of the organisation, and obviously in a situation and period where there is that disruption, a period of people are working remotely, or labour force or staff sizing has been adjusted, and clearly investment or cash flow is being redirected to that stabilisation, then being able to set strategy now, it just magnifies the issues that you'd face and the challenges that you'd face. So hopefully the discussion today will show you that, I suppose, getting back to basics and drawing out our experiences from setting strategy in a regular period of business become even more important at a period of like this, where there are those inherent uncertainties coming out of a period of disruption. Before I hand over to Rob to get into the meat of the discussion, it's worth understanding sort of where we currently are, or what's been happening over the last little while. Obviously, I mentioned the government response, which we're all aware of. Close to 3.5 million Australians were recipients of the JobKeeper subsidy. Those were figures as of last week. Close to 800,000 businesses participated in that program as well. On the consumer side, consumer confidence is starting to tick up a bit. If you look at the different indices that are put out there by the banks, you'll see but between a 2% and 4% increase in personal spending over recent weeks, and the consumer sentiment indices that we also see reported are starting to tick up. The Westpac Melbourne Institute Consumer Sentiment Index jumped by about 6 points to 88 points in May relative to April. So we're starting to see some level of increased activity from a consumer side, probably not unsurprising given that some of those areas, particularly around hospitality and retail, are starting to reopen. But encouragingly also, those reopenings don't necessarily translate through to increased spend, but we are starting to see some uptick in those indices and those data sets. On the business side, in terms of business activity, as I said, we've come through that period of reaction into stabilisation. Whilst business activity is clearly still depressed, it's starting to come through that stabilisation period and into the rebound phase that we're talking about today. We keep an eye on a few indices. One of them is the Services Purchasing Managers Index, or the PMI, and again that's increased by about 6 points to 25.5 points over the last week or two, which again shows that there is an increased sentiment on the business manager side of things. Purchasing behaviour is driving activity across businesses' supply chains, and we'll jump into that as a sort of key part of what we talk about later on. So some positive signs, as Rob will try and explain that a little bit in the context of what the recovery overall may or may not look like, and as I said, drop into a couple of the industries as a first part of the conversation before we get into talking about setting strategy, and as I said, how you might approach that in a period coming out of disruption. Rob, I might pause there and let you jump in and introduce yourself and take over from me in terms of the next round of discussion.
Excellent. Thank you, Dom, and thank you, Sean. It's great to be talking about this today. It's strategy improvement is something that Sean and I are very passionate about, and particularly in the context of what we're facing, it's even more challenging to set a path and navigate through that, given it's so uncertain. One of the things, Sean spoke about the recovery, and that's excellent, fantastic to see. I think everyone's very excited to see things moving again. I did want to just take a step back and think about the impacts this has had on you and certain industries. And I don't think there's been anyone that hasn't been impacted by this in some way. And what we've seen is almost extremes. And I wanted to talk through that and get you thinking about that, because I think that gives you some insight into what the recovery may look like for you and your business. And then from there, we can build on that and talk about, well, what do you need to do? And there's a series of topics that Sean and I are going to touch on and sort of give you some tips around as you approach the next phase, which is largely unknown. So if you think about what's happened, it's unprecedented. There's no doubt about that. We have seen extremes, mostly on the downside, unfortunately, but there has been extremes on the upside. So if you think about telecommunications, broadband in particular, that's seen demand for broadband increase by 100%. Now that's incredible. If you think about trying to scale your business or double your business overnight, and what would be involved in that, that's what they've had to work through in terms of demand. We've also seen grocery, food, beverage, that sort of thing increase by 22% in a month. So if you think back to where we were in March, there was a big demand for grocery and staples, and that drove a number of supply chain consequences down there in terms of trying to deal with that. Now, even 25%, if you apply that again to your business and trying to do that, there's a lot of work involved in scaling and ramping that quickly. Then on the flip side, we've also seen that come off through April and May, so back to normal ramp rates. So you've seen an up and a down. So you need to think about that in the terms of what you're trying to achieve as well. Now, unfortunately, on the downside, which is probably where most of the people have been and most industries have been, there's been some severe implications around airlines, travel, tourism, hospitality, which have all effectively ceased. So no revenue, right? So and no business can really operate in that environment, and we've had to move to this world of hibernation, and that's new to everyone. And as Sean mentioned, most of the people we've been talking to have spent time in that crisis mode and really working through what that means and pulling all the short-term levers. And what we're now starting to see is people moving into, right, well, let's start looking forward again. And that's what we want to encourage you to do as well. I mean, we think it's time to start thinking about what does this mean for the next 6, 12, 18 months? And how do we want to position ourselves, and how do we navigate through the next wave of uncertainty? And the reason that's important is because some industries have been impacted moderately. If you think about construction, particularly residential construction, they've had to work through a first wave of impacts, but there's been an inventory there where people have continued to build housing and construction. But what's a consequence of the pandemic and what's happened is the pipeline isn't necessarily there. So the design and the engineering of certain projects hasn't been as fast and as high as historical levels, which means that they've had to deal with the practical operational considerations of COVID and the pandemic and ways of working. But then there's likely a second sort of impact of the pandemic on the pipeline. So people need to think about how that is going to flow through and the impacts on their business. So the impacts of the way forward for your business is going to look different. And we think looking at what's happened and where you're at is going to help you think about where you go from here. And the way Sean and I have been thinking about this is in three main patterns of recovery. So the first is a U-shaped pattern, and that's where you see an almost a longer lag and slower demand recovery. And there's already some evidence of this. We've been looking into China and trying to understand what's happening there in terms of a recovery and seeing if we can draw any insights out of that. Now, there's some coming out. They're probably 6 to 8 weeks ahead of us in terms of what they're doing. And one company that's being tracked, a lot is H&M, the retailer. Now, if you follow their journey through this cycle, they've seen obviously severe impact. They've had to close all their stores, but as they began to reopen, the demand has been the interesting part. So if you about 6 to 8 weeks ago, they had closed or reopened 89% of their stores, but sales were still down 80%. If you fast forward another 6 weeks, they had then opened 100% of their stores, but sales were still down 30%. So it sort of suggests that there may be a bit of a a slower ramp up than we maybe would have hoped for. But you just need to try and understand how consumers are going to react and how their behaviours have potentially changed. And we want to talk about that in a little bit as well, because it potentially means changes to your business model. The other recovery you may see is this W shape, we've called it. And I think that's important because there is still a residual health risk that exists here. And we may, we've seen it in China and Singapore. We've seen re-emergence pockets of the virus, starting again. And it may get at the point where we need to slow down or re-engage some of the sort of practices the health practices that have been imposed upon us to date. So there may be a start-stop. Now, the important thing within that is called the bullwhip effect. Now, that's a phenomenon where a customer sale will cause a ripple effect down the supply chain, and as it goes down the supply chain, it becomes harder and harder to manage. So the ripple becomes bigger, and an example of that is the toilet paper sort of phenomenon that we saw at the start of this. So we saw a massive demand for toilet paper, almost potentially irrational, unseen before. That if you think about that, people going into Coles requesting toilet paper and it's selling out, and Coles go, right, what have I got to do? I've got to go to my wholesaler. All the stores go to the wholesaler. They go, right, we need lots of toilet paper. They then go to their manufacturer and supplier and say, we need to ramp up for all this demand. So the manufacturer is then making toilet paper 24 hours a day, 24/7. Now, if that all flowed through, the demand came off and they managed through that. But if you think about what would happen if there was a vaccine that came out a couple of weeks after the pandemic and they just ramped up and made 3 years supply of toilet paper in 2 weeks, and then the demand stopped, they're stuck with it. They'll eventually get rid of it, but they've just invested in the capital, the working capital, the materials, the labour to manufacture that product. That's just an example. So you need to really think about where the demand's coming from and why it's coming from, to think about how you remobilise your business. Now, another good example I just touch on here is it's a good example of even internally, this is difficult to get right as well. So European car manufacturer with an oversupply of green cars, and no one was buying green cars, which is fine. I don't own a green car, but the marketing team said, right, let's go and sell these green cars. So they started a campaign and they went and pushed hard on the market. And what happened, they were very successful, and these green cars started flying off the shelf. So people were just coming in and buying them. Now, what had happened is the manufacturing side of the business saw this and they said, all right, well, there's demand for green cars. We're going to start making some more. Now, the sales team and the manufacturing team weren't talking to each other. Now, at the end of the program, they'd sold all the green cars, but they had more green cars than what they started with because the manufacturing team had just ramped up ready for the increased demand. So my point is there that the left hand has to be talking to the right hand, and you need to make sure that your internal teams are focused on where the demand's coming from, why it's coming, and then what you're going to do about it. Okay, and then the other shape is the V shape, and I think we're all hoping for this. But there are some things to think about here, because even in that world, if you're lucky enough to have the V shape, you need to think about how you remobilise your business quickly, but quite often there's going to be a change in landscape, and particularly the competitive landscape. So if you think about some of the changes we've seen already, given businesses adapting to the environment, we've seen gin, alcohol manufacturers, gin distillers making now hand wash. We've seen Uber move into logistics and supply and last mile of that. So overnight, you're going to open up your business, start to remobilise, and you've got different competitors. Now that needs to be factored in along with the scale of your business, and I'll talk to that a bit later on. So there's a lot going on in all of that, lots of moving parts, lots of things to reflect on historically, but then also what happens going forward, which is largely uncertain. And one of the things that Sean and I have been thinking about is how you work your way through that. And success all depends on having a strategy and resetting a strategy. So that means taking stock of where you are now, applying everything that we've just talked through, and creating a pathway that you can flex around. And you're going to have to flex around it. Like, even we've spoken about, this is so uncertain. You're not always going to get this right, but you need to have the agility to be able to react to it and try and achieve that new purpose. Now, one of the way Sean and I think about strategy is based on Rummelt. There's a great strategist, Richard Rummelt, who looks at strategy having three distinct parts. It's around making sure you're solving the right problem, making sure that you've set that direction, which includes assessing all your options, and then making sure you execute it. And the execution is a bit that's often forgotten. I want to spend some time talking about that later on. Like, the number of times I've been into a company or spoken to a client and they've got this great strategy or strategic plan, but it's just filed in the top drawer, and they come back to it every year and say, what have we achieved? And it's sort of, the answer's nothing. It's because no one's actually taken that away and done anything with it. So just breaking that down, if you think about the problem and what you're trying to solve for, Sean and I focus on this in a particular way. We say, okay, this should be really determined by the shareholder. Now, the reason they've invested in your business for a reason, and if you think about why that is, why you invest in property or why you invest in shares, it's usually to make a return on your investment. And quite often, depending on your business, of course, and whether you're for profit, not for profit, your investor will want a return out of the business. And quite often we find that having that discussion up front can provide clarity that can be cascaded all the way down through the business and provides far greater clarity around your strategy as well. It also, when having that discussion, it also unlocks a lot around the ability to make decisions as well. And when you start opening that discussion up, you can align your shareholder, the board, and the management team, which just makes it so much easier to manage the business. Once you've set that target and that threshold, what you've got to do then is then look at, well, okay, we've got that. Well, what's going to help or hinder us in the achievement of that target? Okay, so that will involve identifying the strategic themes that you'll need to work through, what opportunities there to build on. And this is important because once you've sort of honed down on that, you can't have too many here. So you can only have 3 to 6 big strategic issues that your business is going to take on. If you try and take on more than that, you're not going to get there. You won't have the resource to be able to work your way through it. So it's important that you hone in on the key items, but then you need to assess what else is going on in the environment around you. Then you need to develop and assess your alternative strategies, and that includes the evaluation piece as well. So one of the other principles that Sean and I adopt here is well, if something is being evaluated, an initiative or a theme, then it has to be quantified and it has to be linked back to the overall purpose or the return. And if it's not, we're not doing it. Okay, so there's a new concept there around stopping work and programs of work that aren't necessarily contributing back to the overall purpose or adding value to the business. And that is difficult to get your head around, Tom. It doesn't mean that people are going to lose their jobs or anything. It just means you reallocate that resource to what you need to work on, and you're more focused and targeted on the 3 to 6 things that are going to really change your business. And the final element after you've done that is actually the execution, which is often forgotten about, as I mentioned before. But if you don't have the accountability, if you don't have the governance and the plans and link to the operational plan and the ability to respond to changes, so as we've just discussed, this this pathway is largely unknown, but we need to form a view around it and set a path and adjust to it. If you don't have the agility to adjust, you're not going to get there either. So what we wanted to do now is, again, a lot in that, but we wanted to pick 5 topics that we've seen a lot of in the last little bit, and just talk through some tips around that for you and get you thinking about that way. Because although things are remobilizing, the world has changed a little bit, and quite often, yes.
Can I just pick up on a point there before you move on? You make a good point there that everyone's aware of. The world has changed, and I think that really magnifies what we call the purpose sequence. I think you described that well. From the outset, a key part of setting any strategy is being clear on the purpose. And you and I will know that we've worked in situations where the purpose has been communicated in a reasonably binary way by the shareholder. We have invested in this business and we expect a certain level of return. I think where the opportunity is and where the thinking needs to adapt in a situation like this, and in any situation coming out of a period of disruption, is that discussion needs to be more collaborative. It needs to be more circular, so that all the intelligence that the business can provide and the experience that it's having, I suppose, at the coalface in a way, in terms of how the market's responding, what internal resource pressures they're under. As I said earlier, where the capital may have been redeployed to react and stabilise in a period of disruption needs to all be brought into account, so that the purpose can be set in a more reasonable and collective way. Because obviously there's no point a shareholder holding firm, ignoring a whole bunch of stuff that's going on both internally and externally, and sticking to their guns around, well, we invested in this 3 years ago and our expectations around the rate of return haven't changed, because obviously that sets the process up for failure. So I think, if anything, the way that we've adjusted our approach to this, Rob, is that purpose sequence takes on a whole lot more meaning and really becomes a whole lot more collective and collaborative from the process, so that everyone can be informed, and the stakeholders and shareholders in particular, about what's an appropriate, albeit still perhaps a stretch target, but what's an appropriate target around that rate of return and that purpose that then you can feed off from, in terms of all the things you described in assessment through to implementation.
Yes. No, it's a good point, and it's a very interesting discussion, right? Because quite often you have multiple investors that have invested for different reasons, and they won't necessarily be aligned. So some might be investing to get a yield, to get a return out of the business, a cash return annually. Some might want to invest and take the growth side of things, long-term view, and get the capital upside later on. And we've seen instances where they oppose each other, and until you've had this discussion, it's almost crippled the business to the point they can't make decisions. So having that chat and realigning that on the target definitely helps go through a lot of that. You're right. Okay, excellent. Let's keep moving. So the first thing we wanted to talk about is, given we are seeing things move again, which again is fantastic. Remobilizing a business or scaling a business is difficult in any case, but now, given the changes and some of the shifts that we're seeing, like we've seen big pushes into e-commerce, we've seen changes in the way we work, and working from home. The fact that we're having this sort of call over Zoom now is great, but it's going to change the way your business works and functions going forward. It's going to change the way you deal with your employees. It's going to change the way you deal with and access your customers. Okay, so I'm talking about this in relation to sort of the transformational activities that you're going to have to undertake, whether that's investing in your e-commerce platforms, or thinking about your facilities and premises and rationalizing those, or whatever it is, investing in the platforms to enable you to have this type of discussion and work remotely. There's going to be things that you need to change. Okay, so the first sort of tip I have is around failing fast. So So if you're looking to deploy something at scale and you've got to roll it out across your business, try and fail fast. So test and pilot things in smaller samples and take the learnings from that as you start to scale and roll it out across the business. It's going to save you a lot of time and pain as you get to the end of your journey. The other thing I'd suggest is to get the customers involved early on in the process. So get them. It's a great time to talk to them. Say, hey, we've got to change this. What do you want to see? How can we work better with you? We've been doing it this way for a long time. Doesn't necessarily work. We want to support you. What do you want to see? And get their input early. And then when you get to the end, they're happy with it and you go live. I've seen too many examples where so much work is done without talking to the customer. It goes live and the customer goes, well, I don't want that. That's not what I need. The other thing to think about is as you're growing again and scaling your business and sales are coming back online, you're going to need to talk to your upstream and downstream partners. And that's because they're going to go through the same thing. So they'll be suffering from the same pains and challenges that you are. And you've no doubt got governance forums in relation to your partners and suppliers that you do monthly or whatever it is. But I would say put on there demand and supply. So we talked about the challenge of that at the start. So talk about where the demand's coming from, talk about where you're seeing, how that's changing, how that can help them. Because what they're going to have to do, they're going to have to grow with you, but they're also going to have to implement the same sort of changes and systems and processes that you're doing off the back of what you're doing as well. So there's lots to talk about there. They can learn from you, you can learn from them. So I definitely add that to the agenda on top of your normal governance forums. The other thing you got to do is obviously monitor it. Now you need to, obviously, when you set up these initiatives and these changes across your business, without governance, you're not going to know if they're on track or not. You're not going to know if you're moving forward in the way you want to. So you need to follow that closely and make sure you're monitoring the key metrics there so you can adapt. Because things aren't always going to go well. They're just not. There's too much uncertainty going forward. But the key to this is being able to adapt to it. Another point is, if you think about what we've just spoken about, is that you're now moving into almost constant disruption, and people are going to be asked. There's no sort of BAU anymore. So people are going to be asked to change processes, to adopt new systems. So just internally, specifically to their role, they're working through their own sort of change, and that doesn't suit everyone. Some people like just to flex around, a constant, and some people like uncertainty and ambiguity, and like the change in the new processes and the system. So you just need to keep that in mind. Some people are going to really enjoy this type of environment. Some people just won't. So you need to work out where you put your resource and what they're going to take on. And the other thing that I'll get to again later on in the pack is around understanding the investment. Now, again, a growing business is going to generally, depending on your working capital in cycle, is going to absorb cash. Okay, so you're going to need to invest in stock, in inventory, in manufacturing, in people to get things moving again. And you're also going to have to invest potentially in these transformational programs like new systems, new processes as well. So as you head into this environment, it's quite likely going to absorb cash in some way. We want to touch on that a little bit later. The second area, which comes into everything we've been talking about as well, and it's a little bit circular, but it's important you do assess this. And there's some frameworks out there you can use, like the PEST or PEST-E model, which you assess your political, economic, social, technological, environmental sort of areas. But if you think about what has happened and what that's driven, it's driven an acceleration in some of the trends that we're seeing anyway. So, e-commerce adoption and people just going online, changes in the workplace, working from home, at-home consumption. So they're all things that need to be taken into account in your new business model. And we're going to talk specifically about those in a minute, so I won't go into too much detail there. But even simple things like the political environment that keeps on moving, we've seen a move towards greater sovereignty as well, and protecting the health and welfare of the citizens. So how's that's going to change? How is the unwind of some of the restrictions and sort of the restrictions that we've seen on the health and the social distancing, how do they unwind? Do they come back? What does that mean for changes in our business? But even other things like FX, if you're someone that's exposed to import-export market, what's the Aussie dollar going to do over the next little bit? Is it going to move? Is it going to stay the same? And then what does that mean in the long term? One of the things that has been particularly interesting is this pandemic has challenged a lot of our historic previous assumptions around our supply chain and offshoring and profit. And Sean, you have been seeing a lot of this lately. Did you want to talk about that a little bit more?
Yeah, thanks, Rob. 100%. I think where we've seen some of the conversation go recently in terms of the rebound is on the supply chain. Obviously, it's where the engine room of the business often is, but it's being I think the thinking is being developed in a different way. It's becoming more of a, in terms of what you're talking about, more of a strategic lever for businesses as they reset and rebound. Clearly part of the operational engine room, but also a clear part of strategy now is getting this right. I think what underpins this, as we've been sort of contemplating it, Rob, is that a lot of the business rules that were built into supply chain management leading up to COVID are starting to be or are having to be challenged. And you can think, talking about this at a reasonably general level, a lot of businesses obviously thought about how they were, those that were manufacturing or producing, thought about how they do that in the most cost-effective way, and a lot went offshore, over the last 5 to 10 years. So that's being challenged in terms of what the risk profile needs to look like going forward to sustain operations. You think about some of the other rules, consolidating volume of supply obviously increases that dependency risk, but it's also allowed businesses to consolidate supply to a lower unit cost. So that's been baked into a lot of supply chains. Working in a just-in-time environment has meant that a lot of businesses have held little to no stock at any point in time. And in fact, a lot of the narrative has been inventory is a bad thing. Push it up or down the supply chain and don't carry the burden yourself. So again, that way of thinking has been built into a lot of supply chains as well. Keeping suppliers at arm's length of each other, again, has been part of the narrative more recently, in terms of being able to maximise leverage and also reduce cost. And I think finally, one of the rules that we've seen play out is that businesses have determined that making any real significant change or improvement across the supply chain can be difficult and can be costly. So again, where they've been able to, they're trying to outsource the burden for that. Now, I think what a period of disruption does, and what this one in particular has done, is start to challenge all of those things and make people rethink and go back to basics again. The real strategic challenge is obviously how do you balance an adjusted supply chain where you are, I suppose, where you've got risk as a key concern, whilst also being able to manage the expectations across your purpose sequence, Rob, of key stakeholders wanting to get back to profitability quickly. And people and businesses have short memories, and we've now been around long enough where we've seen the cycles go full loop in some instances. So it'll be interesting to see how businesses do respond to that when the pressure comes back on to return a profit quickly. How they then balance these potentially new rules across their supply chain. So I think that's important to sort of set the scene for the discussion around supply chain. and we'll sort of jump into this next piece about resilience. Really, where the conversation for us has gone to is how do you build resilience in a supply chain? If anything, for businesses, the period of disruption has shown that there are pressure points across the supply chain, particularly where they have a manufacturing element and have taken it offshore, and particularly where they've taken it offshore into China and maybe put all their eggs in a small number of baskets. So diversify to de-risk becomes a key part of that. As I said, the balance becomes incredibly important. I think, I've been thinking about this. It doesn't necessarily add additional cost to your supply chain by diversifying, but what it does require of management is the ability to sharpen those skills around managing a larger supply base. So that requires some coordination and some efficiency in your coordination and the way that you're managing your people around your supply base. It requires some consistency in your approach in the way that you're managing a supply group. And it also requires you to sharpen your negotiation skills. So whereby where the leverage balance may have shifted, it's going to require some level of greater relationship management to be able to do that. So I think where my thinking had originally started was, well, diversifying to de-risk makes sense in a situation like this, because you don't want to have all your eggs in one basket again, and to the extent that you can, you want to reduce that reliance risk. Where my mind went to initially was that would add additional cost to your supply chain, but not necessarily if you're doing it the right way. It just means you've got to make sure that you've got that skill set in your tent to be able to do it appropriately. So where does it start? From a starting point, and interestingly, Rob, what we've seen over the last week in particular is a number of businesses talk to us about how they can stress test their procurement function, how they can set up their supply chain differently. Businesses are clearly, in our experience, open to looking at their supply base, but they're putting more thought around probity and counterparty risk and how you set that up and make sure that you're engaging with the right business partners. So profiling your existing supply chain is critical. Understanding and evaluating quickly what your alternative sourcing options are for all your materials. It obviously puts you in a starting point to be able to make decisions and reassess what you're currently doing. That's a lot of discussion around the supply side. Obviously, that extends to the customer side as well. And to your earlier point, you want to make informed decisions. You don't want to run at every gap. You need to be strategic. You need to look at new, but importantly, realistic sales channels as part of the go forward. And look, that may require a different level of investment in your customer service and retaining staff, as we've always learned, is often cheaper than retaining customers is nearly always cheaper than finding new ones. So that might require some level of additional effort and investment. And looking at what businesses have always done, ways to fill capacity, revisiting some of the hybrid options that may have been on the table previously that need to be assessed again, whether it be private labelling, co-packing, those sort of initiatives across the supply chain. We really think, Rob and I really think this is a time for clarity, and where we tend to get in and help businesses is around looking at and resetting the procedural framework. In a lot of instances, so being really clear, particularly if the resource structure of the business has been adjusted or is changing, then but being really clear on what the primary functions are, who's responsible for what, whether the sequencing of activities makes sense. But going through that in a structured and strategic way, you can find those pockets of either those hotspots that you need dealing with, or opportunities for increased efficiency. But importantly, I suppose what we're saying here is just be clear on the roles and responsibilities, and at a really practical level, what's the procedural framework across your working capital cycle and your supply chain, and being clear on the procedural guidelines so that users know what they can and can't do in a situation that may have changed from what used to be normal BAU. And that goes to things like purchasing responsibilities, delegations of authority. Have things changed? Has management set new expectations on the staff that need to be worked through? And that might require an extra level of training and communication as well. We often sort of fill that bridge between ops and finance as well, Rob. So making sure that all of this change and process reset gets fed back through to finance. So any changes that have been made across the working capital cycle in terms of payment terms agreed with both suppliers and customers is reflected in the cash flow forecasting. That becomes obviously really important to understand what the longer term cash runway looks like, and potentially what the funding need or the residual funding gap is in your working capital cycle. You touched on, Rob, technology as a tool. It's not a new concept, but I think as a starting point, looking at the way the S&OP processes work together is critical. Aligning those concepts of demand, supply, and capacity planning, and developing an integrated approach to the extent that it's not already there is really the key. Once you do that, you can work out what next. Where are the pockets of automation that you can build into your supply chain and your working capital cycle? They start to fall out of that process. Under the cover of COVID as well, it's a great opportunity to re-look at what you do from a more strategic point of view in terms of product lines. Maybe there's an opportunity to move out your lower margin SKUs and reset your business in that way, and using the data that you've got internally, but also looking at external benchmarking becomes important there as well. And finally, Rob, before I pass back to you, I think where we've seen some really interesting discussion lately is just the way businesses are collaborating and the partnerships that are developing. I read just a couple of days ago that Ticketek, it's the first ticketing business globally, has partnered with Afterpay in Australia, which is a new partnership, a new collaboration for them to be able to, get back out to market and entice consumers back into some level of activity around their product lines. Equally, on the logistics and supply side, you and I have been working with a couple of food and beverage businesses recently where, for the first time, they're actually having meaningful conversations across their competitor suite and working out how best to draw efficiency out of their logistics and transport divisions, and doing it collectively and collaboratively. And I don't think you and I would have seen those conversations had even 12 months ago, but definitely not over the last couple of years. So it's not out of the question to look at everything, put everything on the table in terms of the way you can collaborate and partner with businesses to find that efficiency, find that cost efficiency in particular, and look at ways to streamline your supply chain more generally.
Yeah, I think that's a great point. I mean, we definitely wouldn't have seen that 12 months ago. I mean, it's great to see, right? Imagine that you're partnering with your competitors, saying let's not compete on logistics and supply. Let's compete at the point of sale. Let's partner to get our goods to the customer. It's a completely different way of thinking about things, and it's fantastic. It's very refreshing. Everyone's going to win there, right?
But I think, Rob, if I was to summarise all that, there's been a clear shift, hasn't there, in the way that people and businesses are thinking about supply chain. It is rightly now part of the strategic suite of considerations, and that you had summarised at the beginning of the discussion. And I think as businesses start to remobilise, it's going to be the first port of call. How do we manage our suppliers and customers in a different way, which brings into play perhaps a different sort of procedural framework, perhaps a different use of technology, a different way of partnering with businesses we haven't thought about previously, at the same time as keeping sort of risk at the forefront of the equation, to ensure that you're building out all these efficiencies, but also not putting your dependency in any one bucket.
Yeah. Yes, good summary. Conscious of time, I might keep moving on to the next area we wanted to talk about today, which is what strategic opportunities are out there in front of you. Now, strategy is often spoken about in terms of big bets, the big decisions that you're going to make that's really going to change the game for you. If you think about everything we've just spoken about, a lot of your competitors are going to be doing the same thing, and rightly. They're looking at changing processes, changing business models, working out how they better interact with their customers and their workforce. And it's all warranted and you have to do that. But what I want to challenge you with is, what are you going to do that's going to set you apart from that? And quite often that can be around M&A. Now, we spoke about the extremes that we've seen because of this pandemic, a lot of them on the downside. Some businesses just won't have the ability to think about or the funds to think about acquiring other businesses, but there are things you can do. If your business has been severely impacted and your balance sheet wasn't as strong as you would have liked, then you can look inside your business and have a look to see if there's anything you can do in terms of focusing on the core, divesting some of the non-core assets. If your business has been monetarily impacted, but you still don't have the funds available to go and make these big acquisitions, then there's still things you can do. And Sean touched on a couple of good ones there around the alliance model, partnerships, consolidations as well. So there's still things you can do that may not necessarily involve a high level of investment, but creates an environment where there's win-win relationships across you, might be your competitors and your customers as well. And then of course, if your business is in good shape, you've got surplus cash, you've got the ability to access additional capital, then now's a great time to look at acquisitions, whether that's competitors, consolidations, vertical, horizontal integration. The opportunities are all there, and this is what's really going to set you apart, I think, from what else is happening out there in the market. What it all comes down to, I think, is if you think about all of that, quite often it is going to involve a level of investment, whether it's rescaling, remobilizing your business through working capital, investment in inventory, materials, whether it's new supply chain, building resilience into your supply chain, whether it's acquiring a new business, it's going to come at some cost. Now, that might be complicated by, if you think of this U-shaped curve, a slower demand. So you may be in this world where there's almost a perfect storm, right? And you're going to have to invest because you have to. And if you don't, then you're not going to be as competitive on the other side of this. So our point here is that you need to be organized around it. You need to have a clearly articulated strategy to communicate with the investors and financiers, to give them the confidence in what you're doing. That's all supported by a robust financial forecast that enables you to go and raise that capital if you need to. The reason why all this is important is this is a company we're working through right now, and I want to show you just how profit, loss, and the impact of hibernation and the rebound potentially plays out. I mean, this is just one example. There's lots of different examples. So if you look at this profit and loss, so you can see from left to right here, this is pre-COVID. So profitable business, revenue outstripping costs. You can see the impact of COVID, obviously business reducing to the point where you need to hibernate. Okay, now in that period, you've still got a level of fixed costs that you haven't been able to defer. You've got a small revenue stream, maybe online revenue. But the point is you're operating at a loss for this period. Now, as you reopen, you eventually start to get to the point where revenue again outstrips cost, which is great. But that takes time. And what you see is you're not actually profitable for a period of time. And in this case, it's next year, it's February, okay? So that all sort of makes sense. But the key to this is cash. So obviously there's a relationship between profit and cash and the way it turns into cash. if you think about that from a cash perspective, so this business started off with a good level of cash reserves. It had to eat into that reserve while the downturn started. It's then maintained that balance, but the main reason, despite operating at a loss, the main reason it's maintained that balance is because of the additional government support, right? So the JobKeeper and deferrals of loan payments and deferrals of release payments as well. Now, they unwind at some point, and eventually your business starts to operate again. Now, what happens is as they unwind and these losses eventually flow through to the point where you think you're profitable again, you've actually got no cash. You need additional cash. And so you sort of make sure that you're thinking about it in that way, and you do have the sort of rigor and the financial modeling and forecast that underpins that. So you have this level of visibility. If you don't, then it's going to be very hard to navigate through this next period. And raising capital investments, they take time. You need to be organised now to be able to prepare for what's potentially coming. Okay, and then finally, I'm trying to leave a couple of minutes for questions. Execution, which I said is often forgotten about or often jammed in at the back of a 1-hour presentation, is very important. You can't forget about it. There's a famous quote from Drucker. He says, strategy is the only best intention unless it degenerates into work. And it's so true. You can do all this work up front, thinking about the problem, thinking about your options. But if no one does it, it's not going to happen, right? So again, the way Sean and I look at this is you need to have a balance of maturity, discipline, and agility. So you're not going to get this right. Things are too uncertain, but you need to be able to adjust. And if you end up in this perfect world, then we call it business renewal, and you can navigate your way through anything. Now that's done through establishment of governance, accountability, detailed plans, making sure they link to operational plans, which is quite often a link that's broken in many companies. The strategy doesn't cascade through. And then agility to respond. So thank you very much. There was a lot in that. Dom, can I throw back to you to maybe ask some questions, or might be on? Yeah,
of course. Yeah, thank you, thank you for the presentation. So we've had a couple of questions coming through. We'll just fire those through before we wrap up. So given that e-commerce is an obvious new approach to providing both products and services, what would you suggest is the best way to test / pilot these platforms to fail and fail fast, or preferably succeed?
Rob, I might jump in. Given I'm the one not wearing the collar, then I can play the more tech savvy guy. It's all debatable. But look, I'll sort of take the question back a step, Dom. I think there's obviously some key principles around how businesses operate, and one of them is around being clear, setting and being clear on the customer promise. So I think that's the starting point. And I don't mean this to sound too theoretical. I think it's an important piece. It needs to be determined. So, what are you trying to achieve, and what do you want to offer to your customer? Particularly if, when we often look at process in terms of the speed of process, the speed to market. So what have you? And as different businesses have different models around this. Some that look at same day delivery, and others that where their customer is obviously aware that they wait for a longer period of time before they receive a good, and that's sort of baked into their model. So I think it's important just to be clear before you start looking at what the appropriate cloud-based or other sort of platform might be to go to market, what you're trying to achieve. And then to our point around collaboration and partnership, it's then working with the right manufacturers, the right other counterparties to be able to achieve that in a way that then starts to build in automation. And that's automation at different levels. So you're building in automation across your supply chain to be able to get access to your product as quickly as you can. And clearly, obviously, automation and digitization in terms of then getting that product out to market. But I think without going through sort of the strategic planning around that, yeah, you don't want to discount those pieces at the expense of going straight to what the outcome or the platform might be, if that makes sense. And Rob, you might want to add a little bit from your experience around that as well, but I sort of see that as key. And I know that haven't answered the question exactly, but I think there's some planning at different parts of the supply chain that need to be understood and done to be able to get you to a point where, okay, I know what's available, I know what I can expect out of my suppliers, and I know what my customers want, and now I can build that into a digitisation strategy in its own right.
Okay.
Yeah, I think that's right, Sean. I mean, the key to this for me is getting the customer involved early, and then the sooner you do that, then you've got that insight, then you can then flow into exactly what you're talking about in terms of creating that digital platform. So,
okay, thank you. And just finally, conscious of time, we'll just have this last one. But if you were to summarize and think of the top couple of things that you would focus on for resetting strategy coming out of this period, what would they be?
Yeah, I'll do one, Wazzy, and then maybe you can jump in with one. I would link this back to where we almost started and the purpose. So for me, if you get that right and you're having that right discussion with your shareholder and the board and the management team, and you set the appropriate target, that just cascades down from that point and makes it so much easier to be able to plan, to adapt to what's coming. So for me, getting that right is key.
Oh, yeah, agree 100%. And then obviously at a time like this where there's a little less certainty around a range of outcomes, yeah, just putting that rigor and effort into the evaluation piece as well. You know, that's where Rob and I see some businesses fail on strategy is they develop a great suite of strategic initiatives, but they haven't been appropriately, costed or, tied back to what the problem is that they're trying to solve. So if you've got a strategic gap of, X dollars or X percent in terms of margin, what is each initiative contributing to filling that gap becomes really critical. But I agree. The starting point for me is what Rob described, going through that collaborative and collective process around purpose and setting it right from the start.
And don't forget about execution.
And customer. Thank you. Well, look, we'll wrap it up there. We're just over 1 o'clock. So thank you both very much for your time and presentation. As discussed at the beginning, the content will be available. There's a live recording which will go onto the Morgan McKinley website. We'll share the slides for the attendees, and I know both Rob and Sean are more than happy to answer questions on a one-on-one level if you want to reach out to them. Both on the very well-famed LinkedIn, having full contact details, or you're welcome to reach out to Morgan McKinley as well for contact details. So thank you for your time. Thank you for joining us, and have a great afternoon. Thanks, guys. Thanks a lot.
Thanks, everyone.